IUL, Indexed Universal Life. How does it work? Before I would dive into how the IUL works, I first want you to know what it is, because there is temporary life insurance and permanent life insurance. Those are the two types of life insurance. 99% of the population knows what temporary life insurance is. It's term life policies. And these policies are relatively cheap. The premium you pay into it is cheap because what happens is that the life insurance company makes you do medical and they are predicting how long you're going to live. Now, they're so good at predicting how long you're going to live based on looking at all your medical records and drawing your blood that they will give you a specific term. This term is either going to be 10 years, 15 years, 20 years, 25 years, or 30 years. Those are the different terms that you can have with a term life policy, right? That is the time in which you'll be insured and then it'll expire. Now, if they only think that you're gonna live for 25 years, then they're only gonna offer you a 20 or 25 year term, right? And the max is 30. There are no terms past 30 years. They're so good at risk management and predicting when you are going to pass away that they will only approve you for a term in which they are statistically likely to have you pay into that term life policy and never have to pay you out. That is why 98% of term life policies never pay out. So if you're going to get life insurance, maybe consider permanent life insurance. Now, what is permanent life insurance? Well, permanent life insurance is exactly what it sounds like. It's in the name. It is permanent life insurance. It never expires. If your policy is still active and in force, when you pass away, it's a guarantee that it will pay out. And there is a term life policy called an IUL, and this IUL is a cash value life insurance policy. Now, the only life insurance policies that earn a cash value are permanent life insurance policies. This IUL earns cash value. So essentially, it's like a savings account, like a high yield savings account and a term life insurance policy molded a hybrid into one vehicle. Except it does a lot of things that a regular high yield savings account doesn't do, and it does a lot of things that a regular term life insurance policy does not do. So essentially, when you put your premiums or when you contribute money into the IUL, what's happening is that a portion of that money goes to, obviously, the cost of the insurance, and the rest of the contributions gets allocated and starts tracking a market index. Now, the money that's tracking this market index, what it's doing, it is now earning a high yield of interest. But because we're underneath the umbrella of life insurance, we're not an investment. Our money is not earning interest inside of an investment vehicle. So now you are not going to get hit with capital gains taxes. And this money is earning interest inside the policy tax-free. And what's very interesting and what differentiates the IUL from every other policy or every other account that you can put money into is this. When you place your money into the IUL, the life insurance carrier does something really unusual. They give you the equivalent amount of money in which you put in, they give you the equivalent amount of money in the form of a line of credit. Almost kind of like a secured credit card. Because if you put $500 in a secured credit card, that creditor will give you $500 in credit. And this is essentially what's happening with the IUL, except the money that you put into the IUL is earning a high yield of interest. Normally, what the average is about 10% interest. That's what all of our clients have been seeing, is an average of 10% interest inside their IUL. Again, all that principal, the money that you've paid into the policy, is now earning an average of 10% interest. On the flip side, all the money that the life insurance carrier is allowing you to use in the form of a line of credit is there to be used for anything you want. If you're smart, you'll take that money and you'll go put that money into other investments. Cash flowing investments like multifamily real estate, single family real estate, precious metals, gold, silver, crypto, Ethereum, Bitcoin, XRP, Solana, any crypto you want. You can start leveraging the life insurance carrier to spend the same dollar twice. The way that you're able to do that is through the infinite banking concept that you can only do with permanent life insurance, with the IUL. Now, that's just using the IUL for the infinite banking concept. You have to also remember, if you just decide that you want to use the IUL as a tax-free retirement income or a supplemental retirement policy, you can do that because you let that cash value, you let that money sit and just keep growing and earning uninterrupted compound interest inside the IUL. Once you hit your desired retirement age, you can now flip the IUL from you making contributions to now the IUL making tax-free income distributions to you in retirement income. Now you're using the IUL kind of like an IRA, or more like a Roth IRA, because you're putting post-tax dollars into it and then it's earning interest tax-free, except there's no contribution limits. High income earners kind of get screwed with the Roth IRA, and they're forced to have to use this backdoor IRA because they make too much money and they don't qualify, or they're not even eligible anymore to participate in a Roth IRA. That's why the IUL also has a nickname of the rich man's Roth. You could also use this IUL to literally set your children up for life. I call it the Junior Wealth Accelerator. When your child is born, start throwing $100, $200, $500, whatever you want, into the IUL. Let that money sit and grow. By the time they turn 16, you can start taking out those loans, have them buy their first car. Teach them how to pay themselves back. Teach them how to use the infinite banking concept at a very young age. When they turn 18, they can take money out to put towards college tuition. When they turn 25, they can pull money out to, maybe buy a house or buy a wedding ring or pay for a wedding or whatever it may be. And you start them out. You open up the IUL when they're very young, literally when they're born, after 30 days old, your child can get an IUL. And you be the owner, you fund it until they either turn 18 or 25, or you can transfer the ownership to them to where they start contributing into it at any point in time, whenever you want to, after the age of 18 though. An IUL is quite simply just the most powerful financial vehicle and the most versatile financial vehicle that any person can place money into. If you want to learn more, make sure to subscribe to this YouTube channel and make sure to take a look at my Enhanced Wealth Academy that I have linked down below. I do trainings, I have tons of resources, I host Q&A calls once a week, and I have 5 courses in there teaching you exactly how to enhance your wealth through our financial freedom framework. They don't teach you about money in school, so I invented and created my own academy to teach you about money, to teach you about investing, to teach you about budgeting, to teach you about everything related to money, because you need to learn how to speak the language of money. You need to be financially literate. Most Americans are financially illiterate, which is why they're broke and don't earn more, they don't work less, and they don't enjoy life. If you've been doing a ton of due diligence on the IUL and this is something that you want to move forward with, go ahead and use that link below to go ahead and book a call with us so that we can actually walk you through personal financial review, see if the IUL makes sense for you, plug and play some numbers, and just look at what the projections of growth inside of an IUL would look like for you.